You're listening to Pre-Market Prep. I'm Brianna Valesky with my co-host Joel L. Conan. We're joined by Greg Harmon this morning. He's the founder of Dragonfly Capital Management. Greg also has more than 25 years of trading experience at BNP Paribas, State Street, and JPMorgan. Greg, welcome to Pre-Market Prep.
Thanks, Brianna. It's good to be back again.
We always enjoy having you on the show. You mentioned that you were looking at some macro breakouts in the US dollar. Can you tell us a little bit more about that?
Yeah, well, last year, starting about this time, the U.S. dollar started to move higher, and I caught a few people by surprise as it moved up over 100 on the dollar index. But at that point, it reached a consolidation phase and started moving sideways in what technicians would call a symmetrical triangle, and it's really looking like it's ready to break out of that now. That would mean to me that we might have upside of another 15% in the U.S. dollar, maybe up to 115 or so.
You also mentioned that you were watching China and looking for another breakout there, I believe. Have you been watching the China stock market as a whole? We've seen a ton of volatility lately. Some people are saying it's in a bubble. What kind of trades are you looking at over there?
Yeah, it's interesting because the first thing that comes to mind is now a manipulated market. And it's kind of funny that that's the case because the statistics out of China have been manipulated for, 20 years, something like that. And only now we're considered about it being a manipulated market. I follow the Shanghai Composite, and when I look at that, it had a great run higher starting in July last year as well, up 150% or more. Then the pullback, they pulled it right back to the 200-day moving average, and it's bounced. Sure, the bounce was coincident with the controls put on the market by the government, but the bounce is holding, and the bounce is setting up an ascending triangle, and it's starting now to break over the 20-day moving average, which has been the key to upside in that market. So, we set today, we moved up again today. We're over 4,000 in the Shanghai Composite, and I think that if we get over 4,200, you could see new highs in the next couple of months. In the U.S., we play that with the A shares, ASHR, as it's more closely tied and currency related with the local market than like the FXI, which is a bit more focused on just the larger cap companies.
Right. Do you think it's even something that the average investor should look at if China's got kind of a manipulated market? Can we even predict what's going to happen, or should people is there a lot of risk in that?
Well, there's risk in any market, right?
Sure.
What you do with your money and how you determine which stocks you're going to participate in, as long as you have a plan in place that manages the risk involved, and you know what kind of risk you're taking, I don't think it matters what stock you're in. If there's liquidity and you've got a risk management plan in place, China's just as good a place to put your money as anywhere else.
Hey, that's a great point. We always emphasize risk management on the show. You also mentioned you were watching gold. What are you seeing in gold right now?
Gold, I'm seeing the breakdown out of a long consolidation. Now, I've written about this a couple times. I think just yesterday was the last time. And what I'm seeing is 1140 per ounce has been holding for a while on this downside bounce, and then a breakthrough just last week and a continuation lower. It's very oversold now on a short-term basis, on a daily basis, down here below 1100, and may consolidate or even bounce back to 1140. But it looks to me as the makings are in place for another run lower. Maybe the charts say that it could go as low as 850. That's a long way from here, and there's a lot of stops that it could make along the way. 1045 would be my next level in it. But it definitely looks like it's continuing the downside now.
We're in the heart of earnings season, so we definitely have to talk about some of the stocks that are reporting this week. You mentioned that you were going to be watching Amazon tonight.
Yeah, For in my service, I write up a few ideas for subscribers on a daily basis as to what to take a look at for a couple of trades. So I'm looking at Amazon and Starbucks and Visa for tonight. Amazon, has been a beauty of a chart since the beginning of the year, stair-stepping higher. Going into the report, the momentum indicators are showing it a bit overbought. So maybe we see some consolidation or pullback, but of course as well as I do that with an earnings report anything can happen, and this is a stock that historically has moved about 11% on earnings. So we're talking about the expectations of like a $55 move in this stock tonight.
Yeah, I'm so glad.
When I
Oh, go ahead.
No, I was just going to say that that makes it possible for it to come back down to the bottom of the last step, down at the 425 range, or to make new all-time highs up above 550.
Yeah, I'm so glad that you mentioned that. It's just, I mean, anything can happen on these earnings reports, whether it's good, whether it's bad. It's like you could even know what's going to be in the report, but you can never guess how people are going to react to it. If they're just going to sell it off, if they're going to take some gains. So it's always just kind of a coin toss. What are you looking at in Starbucks?
Starbucks has just been a great trending stock. It just keeps going higher and higher, and bounce occasionally off of the 20-day moving average and just keeps moving higher. This one also looks as though it may be a tad overbought on the momentum indicators into the report tonight. But what that means to me is that the way to play this is to play it on more of a long-term basis, maybe do a call calendar or something. Buy the August calls and sell the short-dated calls against it to lower your cost and still be able to participate in the upside. If you want to get fancy with it, maybe you sell some downside puts at the 54 level or so for a possible entry on a pullback, a short-term pullback.
And Visa, we're going to see their report later today. What are your momentum indicators showing you for Visa?
Yeah, Visa has been basically moving sideways, a little bit upwards in a slow grind. Almost seems like it's waiting for something to show up in either the economic data or the financial data that says that it's time for it to move one way or the other. I'd say it's a positive-looking chart to me. I like it. I like MasterCard as well and own MasterCard for clients. When I take a look at the short-term technicals in this one, it moved out to a new high this week, but it's still kind of in that rising channel range and bouncing off the top of that channel. So you may see a short-term pullback, and I would take that as a buying opportunity.
Greg, what's been your take on earnings season as a whole so far?
It's been interesting to see the huge moves off of some of these very large cap stocks.
Mm-hmm.
Something like Apple moving 9-10% on the in the day at a $500 billion valuation. It's insane. But it's been those crowd favorite stocks: Apple, Google, CMG, Chipotle, Netflix that have been really making the big moves. Some surprises as well to both the upside and the downside. What it seems to me is that the economy seems to be showing some strength still, a lot better than what you might think if you just read the newspaper or blogs that are saying that we're slowing down and it's going to be tough. Earnings themselves, we're seeing the same thing, I think, so far that we saw in the first quarter, where there's been many beats on profits, but not on revenues. So it's still kind of a mixed picture, and maybe that's why the broad market still is moving sideways.
Greg, let's go into your dollar thesis here. And I know you're looking at it from a technical standpoint and you like your charts. I mean, but you talk fundamentals with us. So do you see any fundamentals out here that are going to, help the dollar move higher?
Well, I think that there are there's some things that had got me into the dollar in the past that I think still prevailed and had me buy some for my wife's IRA just last week, some dollar index. And that's the things like Japan is still heading towards an easing mode. The ECB is also in that vein. And from a global macro perspective, just looking at global interest rates, if the dollar markets are the only ones that are even talking about an interest rate increase, that's going to put upward pressure on the dollar against all currencies.
All right, let's talk about that move in Apple yesterday here, trading up another stick today. A couple analysts came out pounding the table. I mean, they really just kind of punished it because, it didn't beat by as much as they thought. Taking a look at Apple here, trading up a stick. Any thoughts on Apple?
Yeah, I think, Apple, if you were in it before the report, it makes sense to stay in it as long as it stays over 120, put some protection in place. Looking at the options flow, I wouldn't be surprised if we pinned at 125 tomorrow. There's a lot of open interest there.
Good point.
As you say, it's trying to get over the 20-day moving average as we're sitting here watching it here at the open. If you look at the momentum indicators, the RSI is turning back up. It held in the bull range. And if it has a positive day today, well, not just a positive day, but a positive day and ends towards the top of the range, I think it'll probably get a lot more buyers back in.
All right, help me make heads or tails out of this move in Chipotle Mexican Grill yesterday. Trades down to the lower 600s.
Is that crazy?
Yeah, and boy, oh boy, I had to take it off my screen yesterday because I didn't want to lose money shorting it. When should I put it back on my screen looking for a potential short? I can't see buying it. Give us your take on that move and your longer-term outlook here for Chipotle. In full discretion, I do not like their burritos.
I, in full discretion, love their burritos.
Oh, okay.
Heading into the report, I actually gave this out as a couple of trade ideas for free the other night, and with the volatility in this stock around earnings and the moves priced into it in the options market, I thought that probably the safest trade would be to sell a straddle. And to sell a straddle with the 600 and 750 strikes on it, and it looked like it came very close to touching both of them. But that was an $8 sale, and it looks like it's going to pay out. Right now, as you said, the move right after earnings brought it down to around 620, something like that, and then just a $100 rebound yesterday was amazing. If you look at it, it's back at the January highs. It's out of the Bollinger Bands, so it's a little bit extended there, and the RSI, the momentum indicator there, is above 80. So I would agree with you. It'd be tough to buy it here today. If you see this thing consolidate and hold over 700, it's probably early next week. It's probably a buy still. I would look at that as your downside if you're in it, or maybe the bottom of the market open yesterday at 694.
Did you say you recommended selling a straddle in it? Was that?
Yeah. We had talked about selling straddles in it. Sold the 750 call and the 600 put, and that was going for $8.
Oh, you're kidding me! You're kidding me!
No.
And even on that, oh my Lord, oh my.
Yeah, 12% upside or downside swing against a stock that generally moves a little less than 10%, and you were going to get paid $8 for it. It's a nice trade.
Wouldn't that have been in it? Where was it trading at the time when you did that?
The stock was about 675.
Okay, wow. All right, boy, you would think with that kind of move there. Good call there. Anything else on your radar here, earnings season? Any stocks that you think may have some surprises, either to the upside or the downside?
There's nothing that specifically jumps out at me other than that I've been watching the transports for a potential turnaround, and is still kind of inching higher. If you get the IYT, if that can move over 150, I think you might see some surprises to the. Well, maybe that's the tail wagging the dog, but if you see things out of like Norfolk Southern Monday morning showing good numbers, and maybe you start to see the IYT start to move higher as well, and we start to get the Dow theorists talking about good times again.
Okay, all right. We've been on the line with Greg Harmon. He's the founder of Dragonfly Capital. Before I let you go, Greg, got one more question for you. Kind of a trading range kind of market here. We, during the Greek debt crisis, expanded the lower end of the trading range, and now we're back. We actually made a double top in the S&P futures at 2126.25 here. You see a catalyst to take us to new all-time highs here, or just maybe fall back into the trading range?
I think that it looks like we're going to fall back into the trading range. If we get a couple of really good reports and start to see, I talked earlier about the companies beating on profits but not on revenues. If we start to see more and more companies beating on revenues as well, maybe that'll be the catalyst. But it really doesn't look like there's a whole lot of other catalysts. I wrote about this just briefly this morning, that it seems like we're in a range for the summer now, and with no catalyst until maybe a September tightening. I'm one of those that thinks it's not going to happen until next year. There's not a whole lot that's going to happen that could move this market out of a range for now.
Okay. All right, Greg. Greg Harmon, he is the founder of Dragonfly Capital Management. He joins us every month or so, give us his technical outlook on the markets, also throwing some fundamentals in there. Greg, a pleasure as always. Thanks. We'll talk to you again soon.
Thanks, Greg.
Thanks, Joel and Brianna.